Good morning. Welcome to today's episode of Morning Well. Three things that you can look to hear in today's episode: US budget's office GDP projections, the ECB skewed asset purchases, and some IPO action that you can look forward to. US stocks continue to ignore the violence, advancing on the prospect of economic benefits from the lockdowns easing. Gunmakers extended rallies as Trump vowed to dispatch troops if the unrest isn't contained. Treasury slumped with the 10-year yields up around the 0.68%. The dollar mostly weakened for a fourth day, with the Aussie and Kiwi leading the G10 gains, although the yen dropped by about 1%. Oil jumped and gold retreated. Asian equity futures are all in the green. Germany's DAX also surged about 3.7% following a public holiday on Monday on reports that Chancellor Angela Merkel's ruling coalition is holding talks about delivering a second spending package to boost the country's economy. The US economy, in the meantime, would take a better part of a decade to fully recover from the pandemic and related shutdowns, is what the US Budget Agency said on Monday. The Congressional Budget Office said the sharp contraction triggered by the coronavirus caused it to mark down its 2020 to 30 forecast for US economic output by a cumulative $7.9 trillion. The GDP isn't expected to catch up to the previously forecasted level until the fourth quarter of 2029, is what the CBO said. Protests sparked by the death of George Floyd continued across major cities. The unrest has added to challenges faced by businesses seeking to get back up and running following the lockdowns. Macy's delayed the reopening of some stores shut during the pandemic. Apple stores that had recently unlocked their doors are also getting back shut. Australia may keep its record growth streak intact, while analysts foresee a 0.4% drop in the first quarter GDP from the prior 3 months. Early data released by the RBA suggests that the economy may have actually eked out a small expansion. Now, most of the pandemic effects will affect in the current period, which is quarter 2. So the country may not have the 2 consecutive quarters of contraction that mark a technical recession, something it's avoided since 1991. So that will be interesting. So that data would be coming out later today. So it will be good to watch that. On the equity side, Reliance digital arm is now attracting sovereign wealth funds. Abu Dhabi's wealth fund is nearing a deal to invest about $1 billion into the Geo platforms, and the announcement would come as soon as this week, is what some reports say. Reliance is also in discussion with ADIA and Saudi Arabia's PIF. Any new investment would add to the $10 billion that Geo platforms have already raised in the recent weeks, and talks of an early IPO is also heated up. GIC is in talks to buy a stake in Storage Mart. Signs of life in the IPO market. Warner Music Group and Zoom Info Technologies plan to list their shares on Wednesday and Thursday. That would be the biggest overall IPO and the top new information technology issue of the year, respectively. Zoom IPO's effort got a boost. The business intelligence platform now aims to raise about $890 million after boosting the marketed price range for the 44.5 million shares to $19 to $20 each, from about $16 to $18. Moving on to fixed income, the ECB skewed asset purchases under its new emergency program towards Italy, buying 37.4 billion euros of Italian debt since the plan started in late March. So that means that it bought a greater share of the country's bonds than the size of Italy's economy or population. There are guidelines as to how much you can buy in terms of what proportion. Purchases of French debt in the meantime significantly undershot the ECB's so-called capital key. So all of this would come into flavor, I think, tomorrow when the ECB meets, and we'll get some more guidance on how they are going to approach the purchases. Lastly, on the Forex side, persistent rally in equities reflect a general sense of optimism in the financial markets that is at odds with the anger and protests that we are seeing in major cities across the globe. Dollar yen broke above 108 at the start of the New York trading session and held on to its gains throughout the trading day. The same was true with the other currencies that are sensitive to risk appetite, which is the Australian as well as the New Zealand dollars. Risk appetite again should be supported with today's US ADP and non-manufacturing ISM report. From a logistical perspective, service sector was able to restart before manufacturing, and while ADP is expected to report more job losses, the pace would ease. That's what we saw in the jobless claims also, and that might seem to be a positive a trend that the market will take support of. The Australian dollar hit a fresh 3-month high after Reserve Bank of Australia left interest rates unchanged. Up next in the monetary policy announcement on Wednesday, like the RBA, the Bank of Canada is not expected to increase stimulus. The meeting will be the last for Stephen Pauls, who will be succeeded by Tiff Macklem. So any future changes will be reserved for his successor. Euro traded higher for the 6th consecutive trading day. Nearly every major economist expects a pandemic emergency purchase program to be increased by at least 500 billion euros, with some calling for an increase of about 750 billion to 1 trillion. Remains to be seen. We will be able to get more details of it when ECB's policy meet happens tomorrow. That is your market update. Thanks for listening, everyone, and stay safe and healthy.